Hello guys, you're welcome to this webinar. Yeah, my name is Sam, and how you doing guys? Okay, so today we'll be looking at Bitcoin, and we'll be looking at it in a different dimension. You know, among all the technical analysis, patterns or dimension we've taken so far, we've come to discover that Elliott wave is one of the best technical analysis you can do on the market, because that gives you a kind of precise, movement of the market. It can give you, it can predict where the market is going to go and the next behavior of the market with Elliott wave. So that's why today we're going to be looking at how we can apply this Elliott wave to analyze what Bitcoin is doing and what is really going on. Now, the question is Bitcoin in a bull run, or is it still in a corrective mode? So we're going to answer that question as we delve into this pattern, into this chart. All right, so looking at what has been going on, everybody knows that Bitcoin has been on parabolic since last year, and it reaches this top. All right, so when it starts making a lower high, and it starts correcting since January this year, I think December 20 started on 20. Is from this this point down here, Bitcoin has been making. Let me get my article raise. All right. From here, from this point, Bitcoin has been going downwards. It has been doing corrective mode from here, and let's see what has going on. One of the things I want to establish to you guys is that what I've discovered so far is that for Elliott wave, after an impulse, there's a correction, and there's an impulse. So after impulse, what you expect is correction, and what next you expect is impulse. So let me establish the rules here on using this Elliott wave. We have different Elliott wave pattern, but looking at here, we have, let me use the A, B, and C. A, B, and C. All right, so you have this ABC. This is a complete three waves pattern of an Elliott wave. We also have 1, 2, 3, 4, 5, which we'll come to later. But I just want to level on this. The market is meant to move in waves. So anytime there is a correction like this and it's complete, that means the market is expected to move in the direction of the former impulse. For instance, if the market has been, all these lines here, from here to all this has been on the impulse, and the market did a correction. So if this correction, it has completed a three-wave A, B, and C, the market is expected to go what? In the opposite direction. Except whereby there is a breach or along the way, then the market can still be on the corrective mode. So after this, why we had this later bull run is because this market has completed the three-wave pattern. And how do I know? You can see it here. Let's use this arrow. You can see from here the market went down here. The market went down. Let me increase it. Let me increase the. All right. And from here again, it goes up. You can see goes up here. Now, and from here, the market went down. Now, applying this is simply words an A, B, and C. A, B, and C. Let me use the fib to measure it. Let me use the fib to measure it. You can see this one exactly. Falls at this between 0.61 That is a Fibro. So this is a zigzag pattern. This is a zigzag pattern. Let me do the extension. Extension to measure it. Exactly. So this is a zigzag pattern. This is a zigzag pattern. So it's supposed to turn between 1 and 0.126. And that is what actually happened here. So that's why we have the reversal. So this pattern has been a completion of a zigzag pattern. This thing, all this from here to here has been a completion of a zigzag pattern. All right, so let me put another vertical line here. Let me put another vertical line here. So between here is to here now is a completion of a zigzag pattern. So what happened next is now the market is expected to bounce back full. It's expected to bounce back, but there's no guarantee that the market is going to test a new high. So it's based on what goes on. So from here now you can see from here this is a zigzag pattern, and this is our let me label it for some of you who might not really know. So you want to label it, you just click on ABC. All right, ABC. So you put here, this is your A here, this is your B here, this is your C here. Okay. All right. So now, if the market is expected to move up, but looking at what is going on, let's come into this wave now, this movement from here to here, and see what is going on. Now, if this market is still in corrective mode, that means we can label this to be a WX. That means it's going to be an advanced kind of a double corrective patterns or triple corrective patterns. That is when we start talking about WXY. But we can't tell now. But let's look at what has happened since the market tested 6,000. I think the market tested 6,000 plus here to here. So let's analyze between here to here now and see what has been going on in the market. So all right. So how do we do that now? Is to see now come between here and here and see what has happened now. And see if we can predict what the market is doing and what next is about to do. All right, so starting from here now, we can say, okay, this has been a bull run. All right, so you can call this a continuation pattern. This is a continuation pattern. Sorry, I say continuation pattern sometimes is lacking behind. All right, this is a continuation pattern. So we can call this one wave, 2 wave, 3 waves, 4 wave, 5 waves. So let's label it and see. Then we can measure it and confirm it. All right, so we're coming on and picking up our labeling tool here. Pick up from here. 1, 2, 3, 4, 5. All right. So you can see we have labeled this our movements all the way from 6 to. So let's confirm it. You know, labeling is not the ultimate. It's at least for you to understand the structure, what it's doing, and most times people find it difficult to put in the labeling, and I understand why, because man only know what because there's a rule that guides all these things. Like wave V cannot retrace 100% of wave 1, which is a common sense, and wave 3 cannot be the shortest, and wave 4 cannot come in the territory of wave 1, and all that. And between wave 3 to wave 5, it should have kind of divergence between wave 3 and wave 5. So these are the rules that guide Elliott's wave. So looking at it here now, we can see they say that this one is expected to retrace between 0.38 to 50% to 61. So if we measure our fee from here to here, You can see this is between 0.38, so this is acceptable. Is acceptable. So we can do a project 3, which is 1 to 2 extension. So we can do between 1 to 2, 3, between 1 and up. You can see it meets the criteria. Alright, it met the criteria, so it's acceptable. So now the next thing we're going to check out here is to see if there is a divergence between 3 to 5. If there's a divergence between 3 to 5. So let's look at, I normally use RSI. I can use any of the indicator. I think this is one of the best times to use an indicator. So let's compress this so we can see it clearly. Let's compress it, you can see it clearly. Now, remember we are in wave. Now, let me draw it and you guys will see what I'm doing. Let me bring it. So we can see there is a higher high here. All right, but here there is slightly, but it's not too clear. But now, let's go back to 1 hour. Good, you can see in 1 hour it's more clear. So that's what you do most times if you're trying to analyze something in a higher time frame and it's not clearly seen. You can go to the lower time frame and see it clearly. You can see in 1 hour it was forming clearly here. So what do we expect to see next after a 5-wave motif has been completed? Now we're expected to see another corrective pattern, another A, B, and C. But the pattern in which that A, B, and C it can be based on what is forming. So the corrective pattern will be A, B, C. So what do we expect to see from this market here is, let me label it and show you guys, is this. What we expect to see here now is, let me bring my A. From here now, we have A. Most times you have the A around your wave 4. Your wave 4. A, B, and C. A, B, and C. This is what we expect to see. So after this now, then we want to know, good, if the market will now push up. So from here now, we expect your B to be between this region. Now between wave 4 or below it. So I think wave A is expected to be in five waves. That is small 1, 2, 3, 4, 5. So you can see 1, 2, 3, 4, 5. So you can still label this. I think this is the last wave of this A. So what do we expect to see now? A bounce. We expect to see a bounce, and this bounce is expected to go for the corrective wave B. So after wave B now, they will not see this other downward of. So probably Bitcoin is going to go down to 8,000 again, 8,000 regions again. Then before we will not see if actually it's going up or it's still correcting. So this is one of the best analysis of technical you can do using Elliott wave. You know, Elliott wave is a bit complex because it has different dimensions and different rules that's govern it. But I wouldn't want you to confuse you guys. But one of the simplest way you can understand is that what we after the impulse, that is a correction, and we'll have an impulse. So that's the thing you should be looking at for. Impulse correction, impulse correction. You can see there's an impulse downwards, there's a corrective, there's an impulse, there's a corrective, there's an impulse. So the problem now is the ability for you to identify impulse, and it's very simple. So impulse is just something that's moving in a trend, and moving with the trend, like when this trend changes here because of this divergence, it changes here downwards. So you can see this one is moving down, corrective moving down, and they're always sharper. They're always sharp. That is moving in a straight line. You know, it's not ambiguous. It is always easy to see. So that's an impulse for you. So you can see Elliott wave is very, very simple. And if you really understand what you're doing, I think yesterday I sold my Bitcoin at this peak that is 11,600, because I also understand that, you know, there's a divergence and it's going to pull down. And even let's look at it in another way. Look at it another way. All this line you've seen here, I've had this line here for a long time, you know, because I know that this thing is going to, it moves in. It has mind. It can test. So if you brace, immediately it touches this trend line, it bounces. It was rejected. It was rejected. So that tells me, good, you know, it's still not yet ready for the bull run. Still not yet ready for the bull run. So Elliott wave is very good, and that's what I'll be focusing more on, because it simplifies my analysis and also gives me confidence. Yes, it gives me more confidence to trade. You know, most times you don't really know what the market is doing, but if you understand Elliott wave, it gives you confidence to trade, because you know what the market is doing. You don't buy in until after it forms, you know, a buy signal. It pushes up to B and it comes down to C, which I've projected where the C will be using this based on the structure it forms here. Either it forms a regular, which is rare, but most times they all form zigzag. So I expect this B not to be in the level of 5. That means this B will be lesser, and that is makes a higher low. You know, that's a lower high of 5. That means the level of this 5 B will not touch it. So it's formally it will be a zigzag. So I already know where C will be. You see that? So I already know where C will be. So even if I buy at this A, I'll sell at B and buy again at C. That's what we did when it comes to the 6,000. We bought at 6,000 and we sold at 11,000, and now we are waiting for it. So based on the kind of, if you're a short term, if you are the one that swept the markets, you're a short term trade, or you're day trading. I day trade, but I do margin day trade, and which gives me more money and also more risk anyway. And we'll talk more of that on our next episode of video. That is it. So there's one interesting card I just want to show you guys in case you're not in there. This thing will make sense to you. So let's look at it. Let's look at this card. Let me look at the. All right. This is the card. Yeah, the Zcash. Zcash. Yeah. Zcash just completed 1, 2, 3. All right. So it moves up. It completes. So Zcash still have more room of going up. You know, as a matter of fact, I made this projection yesterday as a idea shared yesterday. So it's expected to go up. So if you're not in yet, I think the least it can go down is between 390, 390, 83 within this yellow box. Yeah, that's the least it can go. So once it touches this yellow box, it's moving up. I tell you, it's moving up. So if you're not in Zcash, that's where you combine them, and it has over 99% chances of going up. Yeah, Zcash. It has 99% chances of going up. So you can fill your bags on this and wait for another run of it. So thank you so much for your time, and don't forget, most times you might not understand. Maybe I'm too fast anyway. I'm sorry about that, but you know, I do a lot of things. I trade, and I do business and all that, and I do mentorship too. You know, I run one-on-one mentorship with you guys. You know, and this is a practical class whereby we expose you to what is really working. You know, with confidence. You know, any market you can trade, whether you're in forex, in stock, in cryptocurrency, you shouldn't invest in something, especially all these ICO guys, you know, throwing their money here and there, and at the end, you can get, you can invest in ICO is just a gamble. It's a gamble. Either you win or you lose, and never invest what you can afford to lose. Although some of them, note that 99% of all these token or coin you are seeing now will fail tomorrow. Yes, it will fail. Have this mindset. You're only investing or trading altcoin to double or to have more Bitcoin. Bitcoin can never fail. Even if you fail, that tells you that other ones will fail before Bitcoin will collapse. So my mentality is I'm investing, I'm trading any other coin to gain more Bitcoin. So Bitcoin is my stronghold. But so even if you are holding all those ones, holding for a short time, because what is going on in the market now is something else. You know, the market is a crazy market. You can't predict. Tomorrow one news will come and, you know, the whole market is gone. So, but always put in what you can afford to do. So what do we, all these ICOs, majority of them are scam. You can't tell. They're just there. There's one that my guy showed me. You know, they invested in this ICO. They have Telegram group, but the day they say they are going to launch, you know what they saw in their website? They saw a sign of pennies. That means they have fucked everybody. They have fucked everybody. So, you know, most of these things are just trying to imagine what is not real. So instead of that, learn how to trade the market. Yes, learn how to trade the market. You can start with $100. You know, before you know it, it becomes 1,000, 10,000. That is what you can have. So even if you are investing, you know what you are investing in. You know how to invest. You know when to take profit. You know how to leverage, how to set your stop loss, how to do this. So if you're interested in a one-on-one mentorship, please, my details are below this page. Kindly contact me and we'll have a good time together, I promise you. So thank you once again for your time. See you in the next episode.